you look at Ashok Leyland stock, it's under pressure. Of course, there was some bit of margin miss, but let's talk to the company's CFO, Mr. Mahadevan. Sir, thank you so much for joining Bloomberg Quint and taking out your time. First of all, I would like to congratulate on the fourth quarter earnings and FY18 in general, wherein you have generated over 3,000 crores in cash. But if you could also tell us, moving forward, how do you see FY19 to shape up, and do you expect the momentum that you have created in the last few quarters to continue?
Yeah, overall cash reserve, cash and cash equivalents is about the net cash, I would say, is 3,000 crores, nearly 2,992 or something like that. So nearly 3,000 crores. It has been a good year for us, given the challenges that the industry has had. We have looked at the industry going from BS3 to BS4, and then we have had the challenge of a GST implementation, the uncertainty, I would say, that was happening, but things have kind of stabilized now. Then, of course, we have seen this huge shift in the market from, the smaller tonnages to the heavier tonnages. We've seen things moving to 37 tonner, 41, 49 tonner. So, there's been quite a shift in the market. And the first 6 months did see a reduction. The total industry volume to be lower than the previous year, but there was a smart catch-up that has happened. And in the overall, for the full year, we've seen a nearly 12 to 14% rise in the industry volume. And for us, it has been a record in terms of our production volumes, our sales volumes. The LCV business has done well. Then we have our exports, which is again on record. All businesses have clocked record volume. So, and of course, all of this is evidenced by the I would say the cash that got generated. But I would also say that a lot of this has got to do with the working capital. We had quite a bunch of advances coming in, and we don't sell on credit, by the way. And we had to deplete stocks. But having said that, I think it was a good year and a good quarter. Fourth quarter, our EBITDA was 11.8% as opposed to 11% in the same period last year. We have had quite a good jump in revenues, which is up 36%. So I think the operating leverage kicked in. You've seen that we have been able to pursue our policy of profitable growth. While the industry does still have a predominant heavy discounting, we have been possibly the only player who have been consistently raising prices. So we've done that in April last year. In the beginning of the year, we were the only player when we went from BS3 to BS4 to have raised prices from 12 to 14%. Then we had some price increases happening in July in select models. We had it in September. We had it a bit in January, and then even in April, as I'm speaking to you now, because we have no choice. When raw material prices are going up, we have no choice but to raise prices. So the main reason for us to have done well is grow the revenues. The second one is contain our costs, make some adjustments to prices, and I think these are the two, three reasons why we have seen the profitability in the fourth quarter to be good.
Okay, sir, talking about the way forward, commodity cost, that remains a concern area because, we have seen steel, aluminum, all of these raw materials move up in the marketplace. And not only that, in general, discounting is something which is a cause of concern for the industry. Do you see that coming down? And what about the commodity cost? If you could give us a guidance on that front.
As far as pricing is concerned, yes, it is an issue, because the level of discounting that is prevalent in the industry today is pretty high. We really do not understand why the discounting happens, because I think the best way to win a customer is not through discount. The best way to win a customer is to engage him through your product, services, and the after-sales experience that the customer will have, both on the product and the way you engage with him or her. So that's what we have been doing. One of the key reasons for us to grow in our business over the last 4 years, if you will, is also the disruptive growth that we have had in our network. Over the last 7 years, we possibly have moved from something like about 350, 500 points of presence to roughly about 3,800 points of presence today. And so we are truly a pan-India company. We are ready to take on the market growth that we see, for example, in the north. We are seeing the huge market growth in the north in FY17-18. We were reasonably well poised to grab that. So also in the west, and also in central part in central India. So, I think there's a lot of things. I mean, you need to ensure that you are having good products, you are having your service capabilities are good, the product quality is excellent, and your after sales service and network is reaching out to the customer. I think there is a confluence of reasons for you to win in the market. Discounting is one of them, which is not the best of the way to win a customer. So when the market does resort to discounting, we have no other choice but to reluctantly follow. But what we do also is to ensure that if there are raw material price increases, we have to take price adjustments as we move forward. Now, how much the number is, can I completely neutralize it? A lot of it is going to depend on the market, and a lot of it is also going to depend on the input costs. But that is our policy.
Okay. Sir, talking specifically about the rising crude prices, do you think that is a worry point from the demand side? And also, recently in the few southern states, we have seen some political uncertainty. Do you think this will play on the buyer sentiment?
No, I think I'll break it up into two parts. One is the oil prices. I think that is a cause for concern for India as a country because we are a huge importer of oil, and it is the single largest import that we do in the country today. So, and that actually impacts our our current account deficit. It has inflationary impact. So there are a lot of ripple effects in this. It also has an indirect impact because freight rates depend directly on the oil prices. So if oil prices were to harden further, you would see freight rates going up. So that's not a good thing to happen. But if the economy were to grow faster, and you see infrastructure-led spending happening and projects coming on faster than what they have been doing in the past, I think freight won't be a consideration for projects not to happen. So to that extent, I would say the impact of oil prices on the total industry volume would be there, but not significant. I think there should be basic demand drivers in place which will drive demand in the country. If that happens, I'm not too concerned about a direct correlation between oil prices and the commercial vehicle industry. But there is a correlation between GDP growth and oil prices and inflation. So I presume that the government and RBI will tackle that suitably. Coming to a second piece on the political uncertainty and other uncertainties surrounding, I think, frankly, any environment of uncertainty is not good for growth. Growth happens best when these kind of uncertainties are at a lower level. So, this is again, I think a lot of this is going to depend on government policy. If they continue to invest, if they continue to, if the infrastructure spends happen as been predicted, I think there has been a lot of outlay that has happened in the current year union budget as well. If that happens, I don't see why the industry will not grow.
Okay, so got it. One final question from my side. Ashok Leyland is positioning itself in the after-sales market, defense and exports. So on that front, what is the company's strategy? Of course, the domestic market is doing well. What about these three core segments?
Absolutely. I mean, there is nothing that we're going to defocus on. All our businesses are important. In fact, one of the strategies of the company is to ensure that while we would want to have the domestic truck business to grow and grow as efficiently, if not better than the market, we would also want the rest of the businesses to grow even faster. So we have the bus business, we have the LCV, we have defense, we have aftermarket, we have the power solutions business, and the international business, all of which we have very clear growth plans. So we are in the process of implementing this. But these growth, trajectories will happen in the medium term because there's a lot of foundation that we are laying at the moment to get the growth even faster. So for us, all these businesses are extremely important. And let me tell you, in FY17-18, almost all of these businesses have had record growth and record numbers.